Good evening. Today we will speak about RITES Limited. RITES Limited declared its results yesterday for Q1 of FY22. The company is a 72% government-owned PSU and was established by the Indian Railways in 1974. The company has four verticals: the consulting vertical, leasing, turnkey, and the export vertical. The company had a soft quarter in Q1 of FY22, given the second wave of COVID. This was very similar to what happened to the company in Q1 of FY21, where the company had a very soft quarter. So let's compare the numbers. The company posted a revenue of 355 crores versus a revenue of 335 crores in Q1 of FY21, which means that it was a very flat growth for the company of around 5.7%. Quarter on quarter though, there is a stark contrast. The company has dropped its revenues quarter on quarter by almost 45%, which is a large drop, clearly signifying that wave 1 has made a good dent in the company's top line. Margins though for the company have come in well at 27% versus 18% last year. Mind you, the company in Q1 had an 18% margin, which slowly evened out over the course of the year, and by Q4 the company had margins of 27%, which the company in Q1 of FY22 has been able to maintain, which is admirable. Rajiv Mehrotra, who is the CEO and MD of the company, believes that margins will continue to remain in the 25 to 30% bracket. PAT for the company came in at 78 crores versus 65 crores last year, which shows a growth of roughly 20%. However, again, if I compare it sequentially, the March quarter had profits of 142 crores. Coming to EPS, right, earnings per share, the company made an EPS of roughly 3 rupees a share in the current quarter. If I extrapolate the last 12 months, which is the trailing 12 months earnings, the company is trading at a price to earnings multiple of roughly 15. Now let's dissect the quarter and the management commentary. Right? Due to the second wave of COVID, turnkey projects were clearly impacted, right, which definitely left a dent in the revenues from turnkey. As regards export, the company had roughly 100 crores worth of goods lying in ports but were unable to export it on the 30th of June 2021 and hence were not able to clock that revenue into Q1. Of course, that revenue will now be clocked in Q2, right? And also, the company has won 4,000 crores worth of orders in Q2 of FY21. So the total order book for the company now stands at roughly 11,000 crores, which is the best ever for the company. So with Q2, with certain spillovers from Q1 to Q2 with regard to both turnkey and exports, the company expects a robust Q2 result, right? The company also expects consultancy over the medium and longer term to grow at 10 to 15%. Overall, no surprises with the kind of result that the company has come out with. It's an average result, but it's been a challenging quarter for the company as well. Thank you.